of reaching that as well. Then ultimately we broke down, completely running right back over top of this buy side imbalance, sell side inefficiency to that candle here, created that fair value gap, ran up into the range between 10 and 11. That's the silver bullet trade. That's the one that if you were to ask me if I was only going to trade one time a day in the morning, where would I focus between 10 o'clock and 11 o'clock? Look for the fair value gap, identify where liquidity would be. Well, if we're trading, we rejected up here and we broke down and created a fair value gap and we're rounding back up into 10 to 11. That's what this shaded area is here. Okay, that gray area. Then this is sell side. We have relative equal lows here. And if you want to be overzealous with your objectives, reaching below just sell side alone is not enough for you, then you could reach for that imbalance, which it does in fact trade down into here in the 11 o'clock hour. But the setup forms between 10 o'clock and 11 o'clock, and that is my silver bullet trade where we look for fair value gap, aim for liquidity, and aim for minimum 5 handles. Okay, and you can clearly see it does a very handsome job of doing that. Note the bodies of the candles in here. Yes, we have wicks that are showing errant price action, but the bodies of the candles are telling you the story. The wicks do the damage. The market explodes lower, takes out sell side here, and then digs into the imbalance mentioned on the higher time frame. Then trading back up into the New York PM session, starting at 1:30 p.m. Using that same fair value gap, extended in time. We're not supply and demand. We cut through candles. So at 1:30, that starts the study of the PM session. And between 2 o'clock and 4 o'clock, that's your sweet spot. If you're going to be a PM session trader, use the advantage of having all the morning activity behind you. If you're going to be a bullish day or a bearish day, generally you'll see a continuation in that time window between 2 p.m. and 4 p.m. We do in fact get that. We break lower, and then we'll look at the last hour of trading as well. Here we are on the final hour of the New York session, PM session. And we can see at the beginning of that 3 o'clock hour, we had a high rated shift in market structure here. Sell side imbalance, buy side inefficiency. Midpoint of that is consequent encroachment. It trades right up to it here perfectly to the tick. Doesn't fall short, doesn't go over top of it. Goes exactly right to consequent encroachment. Stops dead in its tracks, which is also a breaker here. Trades aggressively lower. We have a sell side imbalance, buy side efficiency again. Institutional order flow entry drill, which is a partial entry into a fair value gap that doesn't reach to midpoint, which is consequent encroachment, or complete refilling of the imbalance. So institutional order flow entry drill, we want to see that after the market shows a willingness to want to break away. So we anticipate that opening right here with this imbalance to stay open, which makes this a breakaway gap. And it digs into deeper prices. And I measured from this high to that low for standard deviation for swing projections, aiming for the low to target during the last hour of trading. We have a -3 standard deviation at 41.13.5, and it just so happens to be that's the low of the day, and it's in that sweet spot I teach you between 315 and 345, which is the market on close macro. So you're going to see extreme precision if you look at your charts there. It's exactly 41.13.5. Not a tick above, not a tick below, right on perfect. You can't improve on perfection.